Alright, so today we're going to be going over the open setups, mostly gap and goes, and a few dip and rips. But a lot of these are going to be trade reviews from some of the best plays this year, and then some of the best plays from all of last year. But yeah, let's get into it. So the main thing that stems from gap and goes is a daily setup. If the daily setup isn't super good, the chances are that it's not going to have good continuation, or it's not going to work out super good, or it might even fail. But yeah. So Nvidia on the 23rd, if it'll. Alright, so on the 23rd, we were gapping up out of this little consolidation here, moving off the EMAs, one of the strongest stocks on the 20th as well. So what we do, we look at it off the open, makes a nice flag, pushing up off a previous day high, off the 80 EMA. So what you're gonna do, you're gonna enter as soon as the market opens, boom, and there's your target. That happened within 1 minute, and it was 160% in a minute and a half. And then that was my target, 194, because it was the consolidation, or the top of the range, I mean. And then get stopped out there on the last contracts using CBC. Yeah. But that was my target for that one, because it's top of the range. But that one went 160% in a minute and a half. And then Nvidia 1226. Alright, so this one makes a big move, forms an inside day, and then gaps up above that little inside move. Oops. And then here, it's coming off the 50 EMA. So it's already forming a dip and rip a little bit. So there's your entry. It came down a little bit, tapped close to the 80 EMA. So your entry is about right here. And then your stop's at the bottom of the candle. And you just let it work a little bit. And then there, I'm stopped out on the rest of my contracts using the 10-minute CBC. But this one printed 150%. Where's the entry? The entry is once it starts getting bought up off the 50. And then stop is at the bottom of the candles. Dip and rips are so sexy. I'd say my favorite strat. Yeah, dude. Dip and rips are super good. They have the highest run rate out of any of the open setups. And then the final exit, 2.27 R, but at the peak, 3.5 R, which isn't terrible, but if it had continuation, it'd be really good. And then it's hard for these setups to get continuation when the indexes are dumping. Alright, and then the next one is on Halloween. This one didn't get continuation because the indexes dumped right off the bat, but it's exactly what you want to see on a dip and rip setup. Doesn't matter how far the 50 EMA is before you stop looking for a dip and rip. No, you just want to see it fade before open, and you'll see the commonalities in all of these when you look through the Notion data. You'll see like how far the 50 EMA is, what it looks like before open. Like here, it's fading below the 20 EMA, previous day high, and that 50 EMA is lined up. So there's your entry right there. Once it starts getting bought up off the 50 and the previous day high, stop is at the bottom of the candle. And then take trims at pre-market high. And then you get stop break even on the rest. But these ones, this one failed because the indexes were dumping like crazy right off the bat. So when you see that, you do want to take most of your position off at the pre-market high on these dip and rip setups. I've noticed that a lot. It'll go up to the pre-market high, and if the indexes are dumping, it'll fade out right after. All right, now we're gonna go over this one. So you see this beautiful trend line, and this is what I'm talking about when these gap and go setups stem from how the daily look and how good the daily setup is. So all the way from January all the way to May, 5 months trend line. It's gapping up out of that. So then you look at the 10-minute. It's coming off the 80 MA. It's pushing pretty nice. Indexes are also aligned above all the EMAs. So now you're entering as soon as the pre-market high breaks. So there you go. There's your entry right there. Stop is at the bottom of the candle. And then you let it work. And then obviously up here you're going to be taking big trims. Even more trims on that pop. And then there you go. You're stopped out on the last contracts on CBC. You just keep moving your stop up to the bottom of each candle on the 10-minute. Do I enter it right off the open and not wait? Yeah, I've been doing that a lot this year, and it gives really good fills. But you want to make sure everything's aligned, like the market's aligned, there's a good daily setup, and it's opening right at pre-market high. Those are the kind of setups that you want. But yeah, just this one, 9.7R. These ones went 500%. And that was on a Tuesday. 500% on a Tuesday. If you had this on a Friday, that's easily like 1,500 to 2,000%. We see that when the market is aligned, the market's pushing, the daily setup's super good. It's opening right at pre-market high. I want to take that every time. Yes, I do market orders on these. All right, and now going to AMD on the 21st. All right, so we've rejected, it's consolidating here. It's rejecting the top of the range a few times, and now it finally gaps up out of that range. And then if you look at the pre-market, there's your entry. You would want to be mindful of the risk because the candle bottom is all the way down here. And yeah, then you just enter on the pre-market high break. And then there's another entry on the pre-market high retest. Taking big trims up here. And then you're getting stopped out on the last one. And then you see the momentum failure I was talking about earlier. A $3 spread is bad. Alright, bro. But yeah, 5.3. And then these ones also went 300% from the entry point. And then the first of the year. Is that a good pre-market high retest with that rejection candle? I'd have to look at it, but right now we're going over the gap and goes. All right, now AMD on the first day of the year made a lot on this one. These ones went 300% too. They peaked at 400% though. I just got out of 300%. So it's that consolidation, nice little trend line here. It's gapping up out of that trend line. So you go to the 10-minute. Nice, really nice consolidation right before open, getting bought up like that. And now you enter as soon as the market opens. Boom, there you go. It didn't even, and this is why on the super good daily setups, that's why I market order as soon as the market opens, because if you wait literally 1 second in, it's all the way up here. By the time TradingView actually updated, I saw it all the way up here, so that you just smack it right off the rip. And then you let it go. And then you're taking trims on the way up, obviously. Yeah, and then there's your final stop using the 10-minute CBC. So right here at the bottom of the candle, move your stop to there, and then get stopped out. But yeah, that's a 24R trade right there. And at the peak, it was a 28R trade. I guess your stop would be a little bit further down, I guess, but But yeah, these ones peaked at 400%. Alright, and now SoFi. Alright, so here, SoFi, it's reclaiming the EMA's gapping up. Little consolidation here, also into a gap. So then you go to the 10-minute, it's gapping up out of that little range. My target is the gap fill, but it's a pretty big gap, so probably not gonna happen. And then it's consolidating, getting bought up off the EMAs, opens right at pre-market high. And then there's your entry on the pre-market high break. Stop is at the bottom of the candle. And then you get stopped out. And then you re-enter on the dip and rip. So once it starts, you'd get stopped out there, and then buyers are coming up off the 50 EMA. So then that would be my re-entry. And then you let it go. And then there you get the gap fill, and then it hits the daily trend line there. But that's why it's okay to re-enter if the daily setup's super good. Like there, you get stopped out on the pre-market high break, but then buyers come up off the 50 EMA for the dip and rip. Half size on re-entry, yeah. And then these ones went crazy. It was a Monday, so it wasn't as much as what you get on a Friday, but it was a 250% from down here to where I exited. I don't know what it peaked at though. And then SoFi on October 10th. Yeah, it was this one. So this one, it was my favorite setup on the day. Reclaimed the EMAs, formed 2 inside days right after. So that's really, really tight consolidation. Anytime you see inside days forming, you always want to watch for the breakout on those. So here, I don't like this candle, but buyers come up immediately off the open. So I entered on the previous day high and pre-market high break. When pre-market high and previous day high are aligned, it is better once they break. It gives extra confluence. So there's your entry. Stop is at the bottom of the candle. You could even put it below pre-market low if you want, but I always have mine at the bottom of the candle most of the time. And then you're targeting the top of the top, but it didn't get to the top. But from here to here, they went 350% because it was a Friday, and then you get stopped out on the CBC. I was targeting the 30, so I still had a good amount of the contracts when I did get stopped out on CBC, but yeah, you're not always gonna hit your target. And that still paid 350%, so whatever. Alright, and then this is the first play that I ever took on SoFi, July 29th. So here it had good earnings. It was gapping up above this pivot spot. So then you go to the 10-minute. 10-minute looks pretty good. It's above all the EMAs. The market is also aligned. So then you smack it on the pre-market high break. When it is down here, then that's when I do wait for the pre-market high break. But if it's open and right at the pre-market high, I just smack it. And then there's your entry. Stop at the bottom of the candle. And then you let it go. And then there you're getting stopped on the last. But on the first 10-minute candle, from the entry point to up here, it was 300%. Alright, and now we're going to go over Tesla, which is one of the best stocks to trade on these kind of breakouts. We hit a lot of 100% plus trades on this this year, and 2 of them were back to back. So for here, there's a trend line on the daily. It's gapping up out of that trend line all the way from December, so it's about a month and a half. And then it's gapping up over the daily 20 EMA. The target is the daily 50. So go to the 10 minute. Absolutely beautiful flag right before open and right at pre-market high. Then you look at the indexes. The indexes are also aligned, even though they are a little bit extended, but they are still aligned technically. Then you enter as soon as the market opens. I smack this as soon as the market opens. Super good daily setup, and then stop is below previous day high. And then these ones went 300%, very, very fast. I trimmed almost everything at the daily 50. And then there you're getting stopped out on the last. These peaked at 300% up here. I got most out at 200% and then exited the last down here on the CBC on 10 minute. And then the day before that, we're gapping up over the daily 8 EMA, targeting the trend line and the daily 20 EMA. So here, I had the 420 level as my breakout trigger, because it makes this nice little consolidation here, tapping a few times. And then right off the open, I'm going to do the 1 second thing. Yeah, so right there, within a few seconds, buyers showed up really, really strong off the daily 8 EMA. And this is more advanced, so I don't recommend this. But there was a surge of buyers coming in off the daily 8 EMA, so I entered here a little bit of size, and then once it showed even more, yeah, right there, I entered even more. So my average was like there. And then you're targeting the daily 20 and the trend line. And then there, you're eventually getting stopped out on that. But from the entry point and my average to up here, they peaked at 150% as it was a Tuesday. And yeah, your final exit would be down here. And then I'm pretty sure it just ended up failing. So dip and rip off the daily 8. Yeah. Yeah, I'm always executing with the 10 minute. I don't use the 3 minute on the open. The 3 minute gets you stopped out too much if you're using CBC. You'll get stopped too early most of the time. Alright, and now we're gonna go into some of these from last year. September 12th. Alright, so if you look at this, it honestly doesn't get better than this. This big range from May all the way until September. Closing above that at the top of the range. There's a real pre-market high. This one right here doesn't count because it forms more of a base here. So that level break is the breakout trigger. And there you go. There's your entry. Stop is at the bottom of the candle. And then you let it work. Obviously big trims up there, and then you're getting stopped on the CBC on the 10 minute. But that trade 21.4R, and then these peaked at 600%. Yeah, from the entry point up here 600%, and then you're getting out on the 10 minute CBC. But the reason the 10 minute CBC is better, if you look at the 3 minute and you're actually moving your stop to the bottom of the candle, you're getting stopped out all the way down here. And then you're missing this big chunk of the move. Yeah, I have a set stop loss that I drag up and down on Weeble. Alright, and then here, 627, no, 623. Yeah, it was this one. Alright, so there's a nice trendline forming on the daily. No, you can't do that in the mobile app. Gaps up, really tight consolidation above the, right at the 8 and 20 EMA on the daily. And then it's gapping up out of that trend line. Nice flag, opening right at pre-market high. And then the index is not super aligned, but they are moving up a little bit. It's not really bullish or bearish. And then there's your entry right there. Within 1 minute, you're already up fat. Move your stop to the bottom of the candle. And then there's another entry right on the previous day high retest, targeting the top of the gap, or the top of the range. And then, yeah. These ones, sadly, they only paid 400%. It was only 400% because it was a Monday. But if this is on a Friday, these are going like 2,000%, especially with how much momentum it had. But yeah, you'd be getting stopped using CBC right here on this candle. Damn, only 400%. Hate when that happens, for real. And the risk on that, if you're entering on the pre-market high break and having your stop at the bottom of the candle, even if you have your stop at the bottom of this flag right here, it's still a 19R trade. But when this is done, I want y'all to go back and look at the daily setups for all of these. I'll have a description in the YouTube recording, and you can go back and look at the daily setups for each of these. So those ones, 400% on a Monday. So you see, exact same thing. Big move up, tight consolidation. And then it's gapping up out of that range. Yeah. Okay. So it's gapping up out of that range, and then makes that big impulse move, tight consolidation, gapping up out of the range. And then your pre-market high is 348 because it forms a nice base there. And then there's your entry on the break. Stop at the bottom of the candle, and then you let it work. And there you're getting stopped on the rest. But these ones went, this is May 27th. These ones went 300% from the entry all the way up here. And you're eventually getting stopped using CBC on this candle. All right, and then this one, this was my biggest trade of last year. Percentage wise, they went 1,000% on my exit. They peaked at 1,400%. So it makes that big move, reclaiming the daily EMAs, very tight consolidation. And then it's gapping up above all the EMAs, above that trend line. Doesn't really get better than that on the daily. Then here, it's gapping up above previous day high, close to pre-market high. Indexes are relatively aligned, still an inside day, but then your entry is pre-market high break. There you go. And then your stop is below previous day high. And there you're getting stopped. But from here, even all the way up to here, I did cut it pretty early. No reason to, but I did, because it was up 1,000%, and I didn't leave runners, but you would get stopped out ideally on CBC here. But they peaked up here at 1,400%. I had 10 of them at $1 a piece, or $100 per contract. And then they peaked at 14. And that was in 40 minutes. Alrighty, now we're gonna move to Intel. This is a dip and rip on January 30th. Yeah. So we reclaimed the daily EMAs. At the time, the gap was here. Then we formed an inside day. You'll see in the past, if you look, if you get that EMA reclaim and then get that nice move and then form an inside day, a lot of the times the next day right after that is a good mover. And then right here looks super good, looks like everything else, and you take it. You do get stopped out as soon as market opens, so I did enter this as soon as the market opened and then stopped out under previous day high, but it started coming up off the daily 50 or the 200 EMA, I mean, and it got over the 50, so I entered. This was with lighter size because I sized the lighter on the next entry if I do get stopped out right off the bat. And then this one, it failed to enter the gap, but just from here to here, it was 250% at its peak, which was kind of crazy. I don't know how it moved that much, but yeah. And then it ends up failing. Get out on under previous day on the wrist. But this one, I'm pretty sure it's because the market wasn't doing much, right? Yeah, the market was gapping down. Super choppy too. And then on the 7th. All right, so here, it's reclaiming the EMAs, came down, tapped it, starts bouncing up and gapped up above previous day high. Or close to previous day high, I mean. So this is what it looked like. And then your entry is either off the 50 EMA or once the pre-market high breaks. And then right there, it's coming off the 50. So there's your entry, stop below the 50, and you let it go. And then you're targeting up there, but it did go past. I exited my full position at that spot because that was my target, but I need to leave runners on those. And those ones went, this is the 7th, yeah, 220%, which isn't bad for a Wednesday. All right, and now 11:28. So right here, it's gapping up out of this trend line. Doesn't make a big move the day before, but here it's coming off the 50. It's an early dip and rip that you see sometimes before open. Also previous day high retest as well. So then you're entering when the pre-market high breaks. There's your entry. Stop at the bottom of the candle. And you let it work. Obviously taking big trims up here on these pops. And then there's your stop out there. These peaked at 800% all the way up here, but my exit was 500. Yeah. I missed a big chunk of this move. And then December 2nd. And then like I was talking about before, reclaims the EMAs, makes that big move, and then has that low doji candle that I mentioned. And then it's gapping up above previous day high, right at the 50 EMA, and it gets bought up. And this is a day 3 setup. Alright, so it comes down, and then buyers show up off that, and then once it gets over previous day high, there's your entry, and then your stop would be below previous day high since that wick is pretty big. And then there's another entry that you could take, pre-market high retest. And there's your stop. But these ones went 350% on a Tuesday. And I don't know what they peaked at, but that's my exit, 350%. Alright, and now coin on October 2nd. And then there was a gap at the time as well. So that's what the daily setup looked like. It's gapping up out of that range. open it right at pre-market high, and you smack it. There's your entry. Stop at the bottom of the candle, and you let it work. The target is the gap fill. I don't remember if we get it or not. We're pretty sure we got pretty close. But yeah, there's your final stop right there. And then these ones went 250% at its peak. And then another one. This one we hit 230%. It was on TSM. On an all-time high break. February 9th, right? Yay. Alright, so we get this nice daily setup. Reclaim the EMAs the day before. Looking for the all-time high break. And here we have the all-time high, previous day high, pre-market high, all aligned, pretty close. So you're entering as soon as those break. There's your entry. Stop at the bottom of the candle. And you let it go. There's your stop right there. But from my entry, I don't know if I got a good fill or what, but from my entry to the peak, they were 230%. Yeah, I only do market orders for liquid names that don't have bad spreads. If you do market orders on spready names, you're gonna get cooked. Alright, and now on the short side, those were examples of some longs. Alright, so here we go. February 25th. This one, I know what it peaked at because I noted it down when it happened, but it was early in my trading career, so I didn't manage it properly at all. So if you look at the daily, absolutely gorgeous. Gapping down right below this pivot point. And then you would target the daily 200 EMA. Coming off the 80 EMA. Pivot point, previous day low, pre-market low, all end up. Absolutely beautiful trade. Alright, and there's your break. So you're entering. Oops. Stop at the top of the candle. And then, yeah. There you go. This was on Tuesday, so they didn't move insanely much, but they peaked at 300% on that day from where I entered. I noted that down because I stopped out on the 3 minute. Right here. Got stopped out there way too early. And there's so much more room to go. And I was too scared to re-enter these flags right here. But this is when the 3 minute was actually good, by the way. Yeah, that's why daily EMAs are so important. You see how it rejected right off of that at the start? Like there's no target in sight, there's no key level or anything. It's just the EMA right there. Yeah, there just needs to be really fast momentum for the 3 minute to be useful. Alright, and then AVGO. 1212. Oops. Yeah. Alright, so we had an earnings gap down right below the daily 20, and then your target is the daily 50 EMA. Then you get this nice little consolidation here. Open it right at pre-market low. So then you enter as soon as the pre-market low breaks. Your stop's top of the candle. And then you're targeting the daily 50. And there you're taking most off. And then there you're stopping on the rest. This one wasn't a crazy trade. It's just something, it's a good example of what to look for on the gap and go setups. Again, rejected off the daily 50. Alright, and then here's some other bangers that we hit this year. For the short side, Microsoft on January 29th. Yeah. So we get that earnings gap down. Open right at pre-market low. 30-minute also looks good. There's your entry. Stop at the top of the candle. And there you're getting stopped. But these did peak at 400% all the way down here. But it offers re-entries on the smaller time frames. I was just using the 10-minute though. And then Oracle as well on the exact same day. I didn't take this one, but I saw it after the fact because I was focused on Microsoft. But gaps down below this pivot level. Opening right at pre-market low. Makes that nice wick too. There's your entry, and then it just fades out really good. I missed this one though. And there you're getting stopped out on the last on CBC. But yeah, that's how to trade gap and goes. And if you look at it, if you look at all the daily setups and look at the commonalities between all of those right before, like what it looks like right before open, you'll notice a lot of commonalities. Do I ever re-enter after getting stopped out? Yeah, I just use less size, that's all.